Today's episode is brought to you by Forvis Mazars.
SoundCartel.
From SoundCartel, I'm Nicole Goodman, and this is Business Essentials Daily. If you've got some cash on hand, there's plenty of investment opportunities, from technology to insurance to the banks. It's like shooting fish in a barrel, says Elio D'Amato, analyst at Stockopedia Australia and New Zealand. Despite the doom and gloom in the media, Elio sees things a bit differently. He's talking to Chris Ashmore.
The good news is for business owners, we're not quite on a recession in the sense that, over the March quarter, GDP rose 0.1%. I think that was 1.1% compared to the same time last year. And not only that, we're still fully employed. Unemployment's only 4.1%. And we're talking about generally dual income homes where both mum and dad are actually working. So therefore, seeing them hitting the workforce and unemployment rates still relatively low is a good thing. And chances are they're finding a way to remain as liquid as it were, and they're able to keep paying their home loans and all those sorts of things, and they're still relatively under control. But I think where inflation goes is going to be key to where the economy goes. And a lot of people are starting to realize that inflation is cumulative. It's not absolute. So when you get a high inflation rate, don't expect it to come back and then back some more. You don't got to buy those 20-cent bag of lollies anymore, Chris. They're from a bygone era, and that just happens with the price of everything. So just expect prices to remain higher for longer now. And obviously we need things like wages to go up to further support that and the general economy to rise. So we all work in harmony, but obviously inflation is going to be a big part of the headline going forward.
Start of a new financial year, Elio, how's the share market looking?
Well, it's actually looking incredibly good, notwithstanding the concerns that the broader economy may very well have. When you look at our companies, particularly the largest ones on our stock exchange, they are going great guns, to be honest. In fact, both here and in the United States, we're trading at pretty much close to all-time record levels. So one can't dismiss the power of equity investing and the value that it definitely holds. I mean, last week, for example, when it came to the US, I was hearing about talk of who was bigger, Apple or Nvidia. So obviously, it's a bull market, because could you possibly have anything more stupid to actually talk about rather than actual fundamentals? But then again, you can't really rely on them either, because then you look at the oil or energy sector, for example. And I mean, obviously those terrible events on October the 7th, I would have thought that oil prices would have spiked at that time. Of course, they actually fell. So it wasn't necessarily that easy to determine what was actually driving things and why the market was doing what it was doing at that time. Here domestically, look, we're a little shy as investors here in Australia. I mean, when the markets basically go down, we're worried for obvious reasons. When they go sideways, we think they'll probably go down because that's what we do. And then when they go up, we also are worried that eventually they're going to come down again. And I think there has been a bit of a disconnect between the US market, which is very much tech heavy, and our market, which is in large part not the banks, but outside of that, those price takers I was talking about, where commodity prices, with the exception of copper, have been easing in recent times. In fact, I see iron ore, for example, is creeping back towards $100 per ton. An old client of mine, he remembers the day when it was $20 per ton US. But of course, that was a different age, and we really don't want to get there, given the fact that costs have increased some tenfold since things were done back then. But nonetheless, it's obviously impacting our sentiment, and we've seen that. Well, obviously, copper stocks have done quite well, but everyone else, particularly iron ore stocks, have had a bit of a pullback. But even in that entire environment, we continue to remain at close to all-time highs. So kick back and relax is pretty much the view, particularly if you're an ETF investor, if you're busy out there growing your business, but you're using an exchange-traded fund, as it were, to top up regularly into the share market. Things are good. Things haven't been this good, actually, for a very long time, both here and overseas. And then we had, the Canadian central bank, and then we had the European Central Bank. They cut interest rates. Actually, the European Central Bank, that was the first time they did that since 2019, and that was even pre-COVID. So they were already at distress and emergency interest rates back then. So all economies generally are doing quite well. And we've benefited from that on the back of that, and we're also doing quite well. And we've also seen a number of those IT stocks where it's only a small sector here in Australia, but a number of them have done quite well and their prices have been going up. Yep, part of that is the Nvidia effect, but part of it is also the need to return to cash flow, something, again, we've discussed in the past. But obviously, many of these IT businesses have been moving towards generating their own positive cash flow, and that's benefited them. So all in all, long story short, markets are great here, overseas. Currency's even doing you favors if you're an overseas investor. So to be frank, the share market's not the reason why you're poor at the moment if you are invested in that. You need to look elsewhere, and possibly some of those topics we talked about a little earlier might be of interest. But it's always frothy when you get those big takeovers. I mean, I've heard somewhere the amount of companies on the exchange are going down with following big takeovers, like CSR, Boral, again, no surprise to anyone who involves themselves with those sorts of businesses, why they would be buying them right now. Again, no, from an investment perspective, that horse is bolted. Leave that alone for the others, and be plenty of other opportunities out there because optimism is great.
Well, before we go, your stocks to watch?
Well, it's like shooting fish in a barrel at the moment. There are so many stocks out there that have actually been going up and doing quite well. It makes it pretty hard to discuss stocks individually, but I will sort of stick with themes, as it were, in order to try to wrap them up like that. And obviously, I'll start with, again, this whole idea of what can you pass on. Much of it mandated includes insurers, for example. So the IAGs of the world and the QBEs of the world have benefited not from just rising premiums. I mean, there's a rising amount of natural disasters around the world. That obviously sees their ability to lift premiums go up, plus the cost of everything goes up. So they're able to pass those premiums on to consumers pretty easily. And essentially, they're an item that many people need. So therefore, they will actually happily pay that. And interest rates have gone up. So all this cash that they're getting from people before they actually have to go and rebuild houses and do all that, they're actually investing in the market at the moment at a capital secured rate where they're generating quite strong returns on income as opposed to what they were doing beforehand. Also, that sort of marketplace does work for me, competition. So you don't necessarily want to sell the item. You control where those items are actually being sold. So something like a car sales, which has made some very shrewd acquisitions in recent times, they continue to rate quite highly from our perspective, although you got to pay to play in regards to those businesses, just like you do with a Wise Tech, the logistics provider, and a Pro Medicus, PME. They provide x-rays sharing, and they've been winning new contracts with hospitals, which of course no one ever discusses. The reason why we can't afford Medicare is because doctors keep lifting their rates. But anyway, I won't go there. But obviously, it's a sticky client base, very good in terms of a business, and in an environment like this, it should do really well. And then you throw in the likes of a Macquarie, which again, if you believe in our economy over the long term, a Macquarie, the banks, they should continue to do quite well. And then if you're going to believe in this AI story that everyone's talking about, well, you know what? You could, if you like, invest in US markets and get yourself exposure to Nvidia, Google, Apple. I read the other day they're getting involved in. I'm sure it's all been part of our lives for the last 20 plus years. So why not discover it now? But you go to companies like Technology One, Data3, Dubber, for example, those sorts of businesses whereby they're actually currently helping companies implement these new strategies and new technologies. They're the ones to sort of look at right now. Again, you got to pay to play. That's the nature of a bull market. You always have to pay up in order to gain exposure to these businesses. But obviously, that's the thing that you need to remember. You can even throw Dicker Data in that too. To get involved in a hot sector, that obviously means you generally have to pay a premium, because the time we hear about it, it's often too late. And it's often something that we should have considered a little bit earlier. But notwithstanding that, the fundamentals on those businesses look quite strong at the moment, and therefore a whole collection of those. You can even look at the periphery stocks that service those sectors as well. AUB, for example, in the insurance space, you don't have to be an insurer, you can be a broker. All of that, still high stock rank scores as far as Stockopedia is concerned, and generating very good returns, which is just what we want to see from a quality investor like me.
That was Elio D'Amato, analyst at Stockopedia Australia and New Zealand. This episode of Business Essentials Daily is produced by the team at SoundCartel. Thanks for listening. I'm Nicole Goodman. We'll bring you more Be Daily tomorrow. Follow @BE Daily Podcast across social media and head to bedaily.com.au for more from the Business Essentials Daily Podcast.
SoundCartel.
This episode was brought to you by Forvis Mazars. To find out more, visit forvismazars.com/au. That's FORVISMAZARS.com/au.